Welcome. We are pleased to present continuing coverage of Marine Products Corporation on behalf of Burke & Road Reports at Tulane University. Analysts on this project were Zachary Foster, Madeline Kirby, Matt Risner, Tasia Satur, and Ann Marshall Thomas. This is an overview of the topics we will be covering today. We'll begin by giving our analyst valuation of marine products, discussing background information and analysis, and then conclude with our investment thesis. Our analysts have assigned a 12-month target price of $8 and investment rating of market perform for marine products. We use the following data in our revenue model: Consumer Confidence Index, gas prices lagged 4 quarters, and seasonally adjusted revenue. Our valuation of marine products indicates an increase of 54 cents based on the weighted average of discounted cash flow, dividend discount model, price to earnings ratio, price to book value ratio, and enterprise value to EBITDA. Marine Products manufactures fiberglass sport and recreational motorboats. Corporate headquarters are based in Atlanta, Georgia, with a manufacturing facility in Nashville, Georgia. Marine Products produces recreational powerboats through their 2 brands, Chaparral and Robalo. The flagship brand, Chaparral, features 32 models and 7 different lines targeted towards family recreation. Their boats range in size from 18 to 33 feet and in price from $23,000 to $300,000. The Robalo brand is geared towards the sport fisherman market. There are 15 models across 4 different lines. Robalo boats range in size from 18 to 30 feet and from $30,000 to $240,000 in price. The recreational motorboat manufacturing industry is mature, which is characterized by growth similar to GDP growth. As a luxury product, boat revenues are driven largely by consumer confidence, discretionary income, and the price of oil. The most important forces affecting the industry are the power of suppliers, buyers, and competitive rivalry. The power of suppliers is medium because fiberglass, which is one of the main inputs in a boat, is highly commoditized, and Marine Products is a member of the American Boat Builders Association, which gives it buying power for fiberglass and engines. The bargaining powers of buyers is high because of the dealership distribution model, which gives dealers control over showroom space and displays. Finally, the competitive rivalry is high and the industry is fragmented. The largest company in the market is Brunswick, with about 9% of the market. Marine Products competes in the recreational motorboat manufacturing industry, as well with companies that produce other outdoor recreational products such as ATVs. Marine Products' 2 primary competitors are Brunswick Corporation and J&D Holdings. Brunswick holds about 9.2% of the market share. Marine Products' operational risks stem from macroeconomic conditions such as consumer confidence, unemployment, and oil prices. Additionally, the revenue is seasonal with spikes in the 2nd and 4th quarters. Within the industry, the competition and buyer-supplier relationships pose a risk, while internally, key personnel and high fixed costs also pose a risk. Marine Products' largest financial risk is through interest rates. Interest rates affect the dealers' and customers' ability to buy powerboats since most purchases are made on credit. The small forecasted rate increases in interest rates should not have a negative impact on Marine Products sales. Marine Products Corporation has a very low exchange rate and default risk. The number of international dealers has continued to decline over the past 3 years. International dealers must pay for boats in full before shipment, eliminating most exchange rate risk. Marine Products' capital structure mitigates default risk. The company has never had long-term debt and has no plans to take on debt in the future. Marine Products has an Altman Z-score of 9.14, well above the risk of bankruptcy at 3. Marine Products is subject to a high but predictable degree of regulatory enforcement. Throughout the manufacturing process, the Occupational Safe and Health Administration enforces safety standards for the workers. The company's facilities are subject to annual inspections. Powerboat operations are subject to regulation by the Environmental Protection Agency and the U.S. Coast Guard. The EPA requires that powerboat engines meet air emission standards. The U.S. Coast Guard requires commercial manufacturers to register an identification code for all boats. Finally, Marine Products is subject to industry oversight from the National Marine Manufacturers Association. NMMA certified boats are 7 times less likely to be recalled for inspections and are seen as the gold standard in the powerboat industry. The recreational motorboat manufacturing industry is mature, highly fragmented, and closely tied to the overall performance of the U.S. economy. Long-term growth rates in the industry are projected to keep pace with U.S. GDP growth. Marine Products exceeds this growth rate through product line extensions, which give the company a competitive advantage and better outlook for 2016. Marine Products maintains a low leverage capital structure, which boosts its ability to weather an economic downturn. The company's zero debt structure allows it to operate at low to no risk even in the event of another economic downturn. Marine Products' capital structure also frees the company to secure loans at low interest rates if capital funding is needed. At the end of 2015, crude oil hit its lowest prices since 2002. In early 2016, financial markets had one of their worst starts in history, and the Federal Reserve raised interest rates for the first time since 2008. These recent macroeconomic trends may negatively impact consumer confidence. Consumer confidence is a key driver for the industry, but does not translate immediately and could result in fewer boat purchases later in the year. Only a small minority of Marine Products stock is available for trading on a daily basis. As of February 2016, over 72% of Marine Products shares are held by inside investors. Low trading volume makes the stock less liquid. For this reason, Marine Products is better suited for larger institutional investors with long-term buy and hold strategies. Thank you for joining us today for our analysis of Marine Products Corporation. Disclaimer. The Burke and Road reports are provided solely as part of an educational program of Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding a potential investment.